Breaking news. Markets in turmoil. As Trump targets Federal Reserve, global economy on edge. In a dramatic escalation of the ongoing tensions between the White House and the U.S. Federal Reserve, markets in the United States have taken yet another hit. Investors were left reeling as Wall Street suffered a steep and sudden slide, marking one of the most volatile trading days in recent months. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite all plunged more than 2%, sending shockwaves through the global financial system. At the heart of this chaos is President Donald Trump's renewed attack on Federal Reserve Chairman Jerome Powell. In a fiery social media post that lit up the financial world, Trump lashed out at Powell, branding him, quote, a major loser for failing to aggressively lower interest rates. The president urged the Fed to make preemptive cuts to interest rates to inject momentum into a slowing economy. Trump's critique wasn't just sharp, it was personal, and it further eroded the public perception of the Fed's independence. The reaction was immediate and severe. Wall Street nosedived, with investors scrambling to move capital into safer havens. Gold, long considered a traditional refuge during times of financial instability, skyrocketed, reaching a record high of over $3,500 per ounce. Meanwhile, the dollar weakened significantly, and global currency markets responded in kind. The British pound and the Japanese yen surged to their highest levels against the US dollar since September of the previous year. This surge is widely viewed as less a reflection of strength in those currencies and more a sign of deepening weakness in the US dollar. The uncertainty emanating from Washington has rattled investors, prompting many to shift their capital to more stable economies. To help us make sense of this financial maelstrom, we turn to Jeremy Stretch, Chief International Strategist at CIBC Capital Markets. You hit the nail on the head when you talk about independence, Stretch said. That has been a foundational principle behind international confidence in U.S. assets, especially treasuries. Now that cornerstone is being shaken. Stretch explained that the erosion of faith in the Fed's autonomy could have lasting consequences. International investors are starting to keep more capital within their domestic markets. We're seeing increased investment in the Eurozone, Japan, and even the UK, despite their own uncertainties, because the US is simply looking too volatile right now. This trend is further exacerbated by ongoing trade tensions. Later today, the International Monetary Fund, IMF, is expected to issue a revised global growth outlook, and early indications suggest it will not be optimistic. The IMF is likely to downgrade global growth projections, largely in response to the impact of tariffs and the unpredictability of U.S. trade policy. The Trump administration's aggressive approach to trade, most notably the protracted conflict with China, has cast a long shadow over the international economy. Inflation in the United States, which had shown signs of progress, is now stalling. And with tariffs raising prices and disrupting global supply chains, businesses and consumers alike are feeling the pinch. As the World Bank and the IMF host their annual spring meetings in Washington, D.C., President Trump's absence from the proceedings is notable but not surprising. Despite not being physically present, his influence is expected to loom large over the discussions. At the beginning of the year, the U.S. economy was in relatively strong shape, with economists predicting around 2.5% growth. However, as the year has progressed, that optimism has cooled considerably. Michelle Fleury, our North America business correspondent reporting from Washington, noted that Trump's trade war is being felt far beyond U.S. borders. The mood at these meetings is sober. There's a real effort underway to re-engage the Trump administration in meaningful negotiations to avoid further economic disruption. Compounding this uncertainty is the news that the United States is considering a withdrawal from the IMF and World Bank altogether. Such a move, while still hypothetical, could destabilize the entire global economic architecture and severely diminish America's leadership role in global finance. We also spoke with Arian Curtis, senior global economist at Capital Economics. According to Curtis, the central theme of the meetings will be the impact of tariffs and trade uncertainty on global growth. This is the first major IMF and World Bank meeting since the escalation of tariffs earlier this year. The IMF has already hinted that its 3.3% global growth forecast from January will likely be revised downward, he said. While a global recession is not yet the IMF's base case, Curtis warned that the risk is increasing, especially if countries retaliate against U.S. tariffs with similar measures of their own. We could see a worst-case scenario presented, a full-scale trade war that knocks a significant percentage off global GDP. One of the most challenging aspects for economists is forecasting during such volatile times. Curtis emphasized that any outlooks offered by the IMF or World Bank will likely be broad, scenario-based projections, rather than specific predictions. There's just too much uncertainty. They'll present a range of possible outcomes depending on how trade policies evolve. These indirect consequences are difficult to quantify. Countries may begin to seek new trade alliances, bypassing the United States entirely. This strategic pivot could reduce U.S. influence and further complicate recovery efforts. Business and consumer confidence, already on shaky ground, has deteriorated throughout the year. Financial conditions have tightened, and there are fears that business investment will slow dramatically as companies delay expansion plans until they gain more clarity on tariffs. Countries closely linked to the U.S. economy, such as Canada and Mexico, are particularly vulnerable. If the current environment persists, their GDP growth could take a considerable hit. In summary, the world is watching the United States closely, not just for its economic decisions, but for the political turbulence that surrounds them. The mounting pressure on the Federal Reserve, the erratic trade policies, and the looming threat of institutional withdrawal are creating the perfect storm. International investors are jittery, economists are cautious, and central banks around the globe are bracing for impact. Markets crave stability, and right now that stability is in short supply. Whether the U.S. can reverse course or continues down this turbulent path remains to be seen. One thing is clear: the choices made in Washington over the next few months could shape the future of the global economy for years to come. If you found this report insightful, please like, comment, and share to help more people understand what's happening in our financial world. Subscribe to my channel for more in-depth economic updates, financial breakdowns, and global market insights. Your support helps us bring more critical stories like this to the forefront.